Welcome to the Commercial Real Estate Show, your source for market intelligence, forecasts, and strategies. Hello, I'm Michael Bull. Thanks for being with us on one of the radio stations around the country, or maybe you're catching us on commercialrealestateshow.com or iTunes. Thanks for being with us. Well, today we have a great show for you. We're going to talk about crowdfunding for commercial real estate. Now, the Jobs Act really opened up crowdfunding so that individual investors can go online now and invest in commercial real estate projects. It's really opening up the benefits of commercial real estate investing in both the debt side and the equity side to most every American, or maybe in some cases people all over the world. In U.S. real estate, there are some restrictions. Well, today we're going to talk about some of those restrictions. We're going to talk about the trends there and the growth, and how crowdfunding might work for you as either a sponsor, developer, buyer of commercial real estate, or an online investor, again, to get the benefits of commercial real estate in your investment portfolio. Well, please welcome my first guest. It's Brian Korn. He's a partner with Manatt, Phelps and Phillips. He joins us here in Studio One. Brian, thanks for being with us.
Thanks for having me. Happy to be here.
Well, appreciate it. And first of all, tell us, how did you get to become an expert in crowdfunding? How did you get here?
Well, it's an interesting story. So I started my career as a securities lawyer, really looking at how people can raise capital under the restrictions that are available under the state and U.S. federal laws. Did all sorts of IPOs, high yield debt offerings, and other transactions. Then went in-house to Citigroup Global Markets and Barclays Bank as a legal and compliance professional, really focusing on what can we sell, where can we sell it, and with what materials. When the Jobs Act came out in 2012, it was really an eye-opener because it was the first time in about 20 years that there was a fundamental change of the U.S. securities laws in what actually could be offered, not only to high yield and high net worth investors, but also accredited investors and retail investors. It was a real sea change in 2012. And so I left the bank and went back to working for clients, and I'm now at Manatt Phelps, where I'm chair of their digital finance and marketplace lending practice group.
Well, great. Well, it's an interesting path and kind of interesting topic, I think, when you think of investing in commercial real estate projects. It used to be kind of a country club type thing, right? Sponsors or developers buying properties or developing, they had to have a personal relationship with someone to go ask or give them the opportunity to invest in their deal. And now we can go out and virtually ask anyone online to invest in these deals, right?
Yeah, no, absolutely, and I think that the old restrictions, which required you to have a pre-existing relationship with the developer, with the sponsor of the project, have been largely relaxed. We don't even have this concept of a 30-day cooling off period anymore, and caution, of course, still rules the day in terms of looking at opportunities, and there should be a lot of work done by the investor in terms of diligence and review of the project. But it is now less of a closed world in that you don't have to belong to that country club, and you don't have to know the right people to get into the right syndicates.
Right, and you don't have to have $100,000 or $500,000, right? Some of these platforms, you can come in as little as $5,000 and still be in a nice, big commercial real estate project, either on the equity or debt side, right?
Yeah, no, that's right. These projects range in all shapes and sizes. In many ways, you are investing in one-off entities. You'll have sponsors that are running the project, and the due diligence is really on the sponsor as much as it's on the property itself, and your relationship to the sponsor, what your veto rights are if you have any. But we've seen projects where you can invest very small amounts of money, up to the hundreds of thousands or millions of dollars, and it's all being done now online. Even old line real estate investors are moving their platforms online because of the ease of use, the ease of getting closings done, the facilitation of investor documents through digital signatures. All of that has been highly evolved just in the last 2 to 3 years.
Yeah. Well, you'd think that this would continue to grow and become more popular as the investors get the benefits of like you said, now they don't have to go out and find these projects and have the real expertise that the original sponsor has. They can ride those coattails, but yet they're getting some of the advantages of commercial real estate, right? The leverage, the depreciation, the increase in rents, and having that benefit in commercial real estate that you have of inflation on a long-term investment really growing. And I think real estate also has that stability. You know, if you're looking at your portfolio and your stock portfolio and you see it going up and down, and you look at real estate, well, you've got leases, you've got income, maybe it's not as volatile. So what do you expect about the growth, and really how big is crowdfunding? It seems like it should be growing faster than it is.
Yeah, so I think crowdfunding has been, originally the goal of crowdfunding was we all work together towards a common goal, and $5 from a lot of people adds up to a lot of money. It has really been transformed now into an alternative investment space. I think that crowdfunding is going to grow 3 to 4 times a year for the next 3 to 4 years. It has been growing steeper on the debt side. Part of that is, as you mentioned, the appeal of a cash flow model. I know that I'm getting a check every month, and so there's less volatility, there's less uncertainty about the project. If you're investing in the equity of a project in a hotel or an office building or a strip mall, you have visibility in that you know that it exists. You can drive by it. It's a real asset. It's not a closed box business that you're not sure what they're doing or how profitable they're going to be. But at the same time, there's more risk there in terms of when your exit's going to be and for how much. Generally, as a crowdfunded investor, you're going to have very little say in that aspect of it.
Right. Yeah, and that's part of the benefit. You're not in there screwing that up, right? You've got an expert, hopefully, that you've checked out the sponsor, and they're making good decisions. And you're right, it's not as liquid. And let's talk about some of the restrictions, right? And because that seems to be kind of a moving model, right? So tell us if the difference between what an accredited investor and a non-accredited investor can put into deals, and how sponsors can work with them.
Okay, sure. So at its core, commercial real estate investing is really investing in a securities offering. You're buying an offering of usually an LLC interest in a newly formed company that's going to invest in this venture. Often in the real estate space, LLCs are formed just for the specific purpose of a project. In other ventures, in other areas of crowdfunding, you might have a multi-purpose LLC structure. To invest in securities in the U.S., you either have to have a public offering, which is registered with the SEC, or a private placement exemption. The most popular and most widely used private placement exemption is the unlimited offering exemption to accredited investors. An accredited investor, using something that people may have heard of called Regulation D, which is an exemption from registration, is an individual that has $200,000 of income in the past 2 years with the expectation of the same income in the current year, or a married couple with $300,000, or a net worth of $1 million, excluding the value of your primary residence.
And that's or, not and.
That is or, not and.
Okay.
And a married couple, neither of whom comprise $200,000, can combine for $300,000 and meet the requirements. And it's a regulation that goes back to the early 90s in terms of setting the limits of accredited investor. Those numbers were bigger dollars back then than they are now, but the SEC still estimates that about 92% of U.S. households or U.S. persons live in households that are not accredited. So we're really talking about a lot of people, but it's really the top 8% of earners or net worth in the U.S. Now, as an accredited investor, you can buy an unlimited amount of securities that are sold to you in a private placement. There are two main forms of private placements coming out of the Jobs Act, what we call the solicited private placement and the unsolicited. A solicited private placement is one where the sponsor or the person making the offer uses general advertising or broad solicitation. If you're talking about a website, you can see live deals without logging in. Blast messages on live transactions are being sent to people who haven't signed up for email, and social media is being used to broadcast projects. Those are examples of solicitation. If you solicit, you can only sell to accredited investors, And you also have to take reasonable means of verifying that they actually are accredited. You can't just take their word for it. In the unsolicited model, so if you have a locked website where you have somebody have to register and log in with a password, you can advertise the website and the product, but you can't advertise live transactions. In that model, you don't have to verify that someone's an accredited investor. It's a little bit less costly that way. You can also sell to up to 35 non-accredited investors per project, provided that those investors are provided a prospectus-style disclosure document. So it gives you a little bit more flexibility in who you can go out to. You don't have to pay the cost of verification or verify you on your own, but at the same time, it might give you less flexibility in terms of marketing.
Wow, that seems like it would really open up the floodgates on crowdfunding, and it should grow. We're going to talk about some more of the benefits for sponsors and investors. Stay with us. This is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, Asset and Occupancy Solutions. Xceligent, building data everywhere. Valuate, easily share what-if analysis with colleagues online. And First Service Solutions, your CMBS borrower advocate. For more information on how these businesses may be of service to you, visit creshow.com. Welcome back to the Commercial Real Estate Show, which during the breaks, do you know that we dance? No, we don't. No, we think about it though, right? Welcome back. Today we're talking about crowdfunding for commercial real estate. My guest is Brian Korn. He's a partner with Manette, Phelps, and Phillips. And we're going to share some tips with you for investors and for sponsors. And Brian, first of all, what are some of the key benefits for a sponsor to consider crowdfunding?
So for the sponsors, it's really an opportunity to diversify their capital sources. In most cases, we're still seeing, because of the time to close issues, we're still seeing sponsors close deals before there's an opportunity to really syndicate it out to the crowd. But whereas a sponsor might have a few investment funds or traditional sidecar investors, the crowd really opens up a lot of potential for a sponsor to diversify its funding sources to the general public, to people that it doesn't know, and to really build new relationships nationwide and worldwide that it would have to spend money investing in if it were doing it the old-fashioned way on the local basis.
Okay, so if there's a sponsor out there watching or listening, and they're considering, and we talk sponsors, we mean developers, people buying properties that are reaching out to the crowd for investors for some of the funding of that. When the sponsor is looking at these crowdfunding platforms, there's over 100 of them. What should they consider in determining which one they may want to use?
Well, first of all, you want to look at a platform that has a track record. The Jobs Act is now 4 years old. The private placement rules from the Jobs Act came out in late 2013. So there are quite a few platforms out there that have significant track record. Not all platforms are equal. Some don't even specialize in real estate. Many of the real estate platforms are specializing in residential or specializing in mortgage-backed. So take a look and really do a deep dive into the platforms. The leading commercial real estate platforms right now are platforms like Realty Mogul, Asset Avenue, and others. There are some that focus on different types of asset classes, such as apartments or condos versus other types of developments. And then don't be afraid to pick up the phone and call them. They're real people. Ask questions. Ask what the fees are. Find out what type of structure you can import into the transaction. Can I form my own LLC and have my own management company that manages the crowdfund LLC? Or is this going to be something that's structured on the platform side, and I'm really just the recipient of a check with no real management rights to that group?
Because some of these platforms will be really different than others, right, in how they work and for the sponsor and for the investor.
No, absolutely. Yeah. And many of them, you also have to look at how well they're capitalized. Mm-hmm. Their investment, you're counting on them and their investor relations team to do investor outreach and to maintain adequate records, to be in compliance with broker-dealer rules if they apply. And in many cases, you may have a group that is not as seasoned as you would pick to run this type of process for you. Ultimately, it is going to be your responsibility as the sponsor of the property, and you may end up being the deep pocket at the end of the day if it turns out a platform isn't doing its job properly, or they don't get funding in their next Series A or Series B round and they end up going out of business.
Yeah, that would not be good. Well, let's talk about some tips for the investors. So it's kind of nice now that with some restrictions, most anyone can invest in these nice commercial real estate projects with sometimes as little as $5,000. So what are some tips for investors?
So investors, there's really two risks. The first is the actual risk of the investment in the property and the sponsor group, and the second is investing in that platform and doing business with those.
So kind of three things:
companies.
the sponsor, the property, and the platform.
Correct.
Yeah.
And so when you go to a typical site for one of these projects, you'll have information on the project. You want to do a deep dive into the financials, especially look at the projections, look at what assumptions are being made about lease rates, about stacking plans, how long are the leases for the tenants that are currently in a space, are they all expiring at the same time, are they all coming up due pretty soon? Don't be afraid to pick up the phone again as an investor and ask questions. There are people who are there at the platforms who are usually happy to take your call. If they're not happy to take your call, then that's a red flag. Yeah. The platform will also talk about the track record of the sponsor and look at the sponsor's record, look at their past transactions, look at what the IRRs and the returns have been on these sponsors' deals that have gone through to maturity. Remember, when you invest in a commercial project online, you are most likely going to be paying more fees than the sponsor is going to be paying for that project. The sponsor is probably charging you a fee to manage the project, so you want to look carefully at the fee structure and compensation structure. Sometimes it's an appropriate fee because you're very passive and you're not coming in with the big check, but also take a look at what are the projected hold times. Something that these sponsors will put out is, we expect this to be a 5-year hold, but it could be a longer hold. And you won't know, and you won't generally have the right to say when there's an exit or for how much. And so these are all control issues that you have to be prepared to give up somewhat to the sponsor. So in many ways, diligence around the sponsor and the sponsor's track record and their wherewithal to manage the investment are just as important as the underlying property.
How about skin in the game? How important is it to that online investor, and how much do they actually know about how much equity and cash the sponsor, the people that are actually controlling the asset, have in the deal?
Yeah, so again, in a well-structured commercial real estate crowdfunding platform, all of that should be laid out, and not just in embedded PDFs, but you should actually be able to go to the project page and pretty easily click down or scroll down to a simplified version of, okay, this is a $30 million hotel. We are putting in 1.5 of that 30 million. The sponsors are X and Y, and these are the fees we're going to be paying, and this is the expected return, and these are the assumptions. And so really being able to drill down on that information is critical, and having those resources is important. And again, don't be afraid to call and ask questions. Don't be afraid to call the sponsor. It's for the sponsor, from their perspective, you'd be looking at the crowd as a partnering opportunity, as a way of diversifying your capital away so you can fund future projects. This is not an opportunity to sell and go away or to sell through the project to the investor group. That's generally going to be a red flag for most investors if you don't have skin in the game. And there should be transparency around how much of the project is being retained, the economic interest is being retained by the sponsor, and how much is going to the crowd. If it's more than half going to the crowd, or 75%, or those very high numbers, then you should start to ask questions. Why isn't the sponsor incentivized to stay in the project through maturity? What is it about the project that they see that you don't?
Yeah. Yeah. I mean, if you're going to spray and pray and just put a little money in all these deals, maybe you're not doing as much, due diligence. But if you're putting, $50,000, and that's a lot of money to you, and this should be a lot of money to anyone, you better do more due diligence, including understanding the project and, like you said, the sponsor and the submarket and what's going on there. And it's interesting to see how this is going to all work out in the world, because you're talking about investors who maybe aren't commercial real estate experts now investing in commercial real estate. And if it's like online gambling, I see some people doing online gambling or buying real estate online, and they'll pay a lot. It's like they think they're betting in Vegas. It's amazing. Well, Brian, thanks for joining us. We appreciate you being on the show.
My pleasure. Thanks for having me.
Well, stay tuned. We'll have more on crowdfunding for commercial real estate. This is the Commercial Real Estate Show, and I'm Michael Bull. Stay with us. The Commercial Real Estate Show is brought to you by Bull Realty, Asset and Occupancy Solutions. Xceligent, building data everywhere. Valuate, easily share what-if analysis with colleagues online. And First Service Solutions, your CMBS borrower advocate. For more information on how these businesses may be of service to you, visit creshow.com.